Thanks, I'm unmuted now. Thank you so much. Thank you and good morning, everybody. And thank you for joining this important conversation this morning. We're excited to be able to offer this opportunity for you to engage with some important leaders and subject matter experts regarding the Paycheck Protection Program. We at the NAACP understand what is happening on the ground in terms of what's going on with small businesses, with churches, with nonprofits. And we felt like it was important for us to be able to provide this information to you directly. So thank you so much for being willing to get on this call at such short notice. We're gonna have a quick program this morning to provide you with information. Please, you have received an email, I think, from members of our team that'll be able to talk to you about the details of your questions. So I want to go ahead and get started this morning with the actual program itself, which is, I want to sort of introduce Congressman Dwight Evans, Vice Chair of the House Small Business Committee, and his staff. Are you on the call?
Yes, hi, good morning. This is Felicia Parker Cox.
Great. Will you be willing to kind of talk to us about the Paycheck Protection Program? Give us a brief description of the program itself. We know that there's been money added to the program in this last legislation that was just passed. Tell us about where the program began and what the opportunity is right now.
Absolutely. Thank you so much for allowing us an opportunity to share with everyone today. And so I'm here representing the Congressman because he was called to DC to do the good work that many of our legislators are doing to ensure that our small business community is able to thrive and do well under these unprecedented circumstances in regards to what we're going through as we know it now. So the PPP, Payroll Protection Program, was implemented as a part of the CARES Act. And the CARES Act was enacted into law on March 27th of 2020. And the purpose was to provide emergency assistance to small businesses and eligible nonprofits affected by the COVID-19 crisis. And so within that act is the PPP, the Paycheck Protection Program. And that is a guaranteed loan program through the SBA. And it's used to help cover business expenses. So what that looks like are payroll expenses and other expenses such as rent and utilities to assist small business owners in first and foremost keeping on their employees. And that's pretty much the goal, is to make sure that our business owners are able to retain their employees, Americans working. It is 100% federally funded, and 100% of the amount that a business owner gets is eligible for forgiveness if employees are retained.
Thank you so much. I'm sorry. I do apologize. I kind of got out in front of myself there. I'm sorry, Derek Johnson, President CEO of the NAACP. I'm sorry, Derek. I want to give you an opportunity to kind of set the stage and explain why this is an important agenda item for us as an organization.
Good. Thank you, Marvin. And first of all, I want to thank everyone who's joined us this morning. As I'm looking at the tally, we have 875 people who logged on. We've had over 1,700 people who registered. This webinar will be videoed and shared. Information would also be shared. We pulled this together as a result of receiving multiple inquiries from the Black business community, from the nonprofit community, and from our religious partners. Recognizing that the first round of Paycheck Protection Program funds were dispensed very quickly, but unfortunately, it was dispensed in a way in which many of our organizations were left out. So once the Senate bill passed, some of us on this call, particularly panelists, we worked very hard to try to get a carve out to ensure that not only Black businesses had an opportunity, but businesses with under 10 people had an opportunity. We're still fighting that fight. The House is considering the bill today. There will be many people calling in to try to get the necessary carve out so that our businesses, our religious institutions, and nonprofits will have an opportunity. Congressman Evans and I talked this morning. He was going to try to be on the call, but he was called into a committee meeting of the Small Business Committee, but he assured us that we have a staff person on the call. In addition to that, the opportunity that this program presents many of our companies is something that we should not take for granted. On yesterday, we made a late afternoon decision that we needed to pull together this webinar in order for people to have an opportunity to participate. It's going to be critically important that you are able to gather all of your information. Some of you have already applied and you have applications in the pipeline. Some of you need to gather information so you can apply. Some of you are somewhere in the middle where you fill out the application, but you don't have all of the needed documentation. So this call was framed with that in mind. We are glad to have experts to provide some legal advice. Mitchell Titus is the largest CPA African-American firm in the country. First Independence Bank is a substantial bank in the city of Detroit, but Keith Kelly is the head of the Black Bankers Association. Hope Community Credit Union is one of the largest African-American Black credit unions in the country. Bill Bynum has been stewarding that credit union to grow to be in 5 states, but most importantly, he has kept a keen eye on how this bill is moving to ensure not only our Black financial institutions are included, but we get an opportunity as a whole for Black businesses not to be overlooked. And we are pleased to also add Tyra Moore. He's a solo practitioner in the Maryland area to provide some legal advice on how to navigate this moment. And we want to end by having opportunities to receive your questions on this Zoom call, but also we are capturing many of your questions that you're typing in so we can have a FA, frequently asked question. Now let's be clear. Once the House passed this bill and the president signed it, if that happens today, it is first to the race. If the applications go live tomorrow morning, $400 billion will probably be accounted for by close of business on tomorrow. So we are racing against the clock. There is no time to delay. There's no time to contemplate. There's much time right now for you to consider what documentation that you need to pull together. And this Zoom call will help you understand the critical importance of the information you pull together. So I'm going to stop there, turn it back over to Marvin so he can bring up our presenters as they provide insight on what you need to do as African-American small business owners, our religious leaders across the country, and our nonprofit partners. So thank you for joining us this morning. Marvin.
Thank you, Derek. So let's get going. Let's get started. There's a lot of information we want to share with you. We want to make sure that we're able to get through the panelists because they have a lot to share. They want to give you some good information. So we're going to tee up our first presenter for this morning, who is Irene Davis. Ms. Davis is a CPA partner at Mitchell Titus. And Ms. Davis is going to spend some time talking through the documents and process that's involved in this, the application process and the required documents. This is a key element of this application process. You need to know exactly what documents are required so that you can really have your application be considered. So thank you, Ms. Davis, for agreeing to be on, and the floor is yours.
Good morning. Hopefully everyone can hear me. I'm going to spend a few minutes talking about the application and what is required by way of documentation. I will, just to start off, I will say that each lender, right, has its own application process. That application should be based on the SBA's guidelines, but in terms of the specific information that each lender is requesting, it may vary. So I'm just going to take you through some of the, take you through the calculation and then take you some of the documentation that we believe may be asked of you. So the application itself, if you go to the SBA's website, the application is actually on the website and you can actually see that application. Again, the form of it may be different when you go to your individual lender, but you will see it's really not very, it's not intimidating at all. At the end of the day, the biggest thing they're asking you for is your average payroll cost. And we're going to spend a few minutes talking about how you calculate that. In terms of the amount of the loan that you were eligible for, it is based on your annual 2.5 times your annual payroll costs with a maximum of $10 million. All right. So when you look at the average payroll cost, that's where we're going to spend a couple of minutes talking about what's included in that. Is there any? Okay, great. So when we think of average payroll, I think we all understand kind of what payroll is, right? So there's a lot of words on this screen, but at the end of the day, they're looking for you to provide your average payroll based on your gross annual payroll, okay? With a few inclusions and a few deductions, all right? So if you look at the first bullet, payroll costs consists of compensation to employees in the form of salaries, wages, commissions, or tips, all right? It also includes any payment for vacation, sick, or sick leave. It also includes any separation payments for any terminated employees. And it also includes certain employee benefit costs, such as your health insurance premiums and retirement contributions to a 401k plan or some other defined benefit plan. So if you take those the first 3 bullets, right, that's what you would typically define as what we call your gross payroll, right? So for those of you who use, whether it's a payroll provider or you process your payroll in-house, those first 3 items would really be your gross payroll. And then they're telling you or telling us that we can add employee benefits, such as insurance premiums that you pay for medical or dental or other kinds of healthcare related insurance or healthcare related costs. And then lastly, in terms of employee benefit plans, again, you can include contributions to your 401k plan or contributions to other traditional defined benefit plans. So again, not to keep being repetitive, but your gross payroll plus employee benefit plans consisting of healthcare costs and retirement plan costs. Within the definition of payroll costs also come certain tax-related expenses. Now, I think I need you guys to listen very carefully because you cannot include federal employer tax expenses or costs. However, you can include state and local taxes paid that are based on compensation of employees. Now, if somebody could just go back a little to the previous screen. Now, what I talked about is really related to whether it be corporations or not-for-profit organizations that are organized, whether it be a 501c3 or you're a corporation or a LLC or LLP. However, we also know we have some independent contractors and sole proprietors out there, okay? So this includes similar things, your wages, your commissions, your income, or any other net income that you receive from self-employment. Now, when you're calculating your payroll-related costs, there are some exclusions. And again, I need you to listen to me very carefully because these are federal dollars and there are certain requirements associated with the calculation of what you're eligible for. And you want to make sure that you are in compliance with these requirements. So if you have any employees on your payroll whose principal place of residence is outside of the United States, you have to exclude the full amount of that compensation. Additionally, if you have anyone on your payroll that makes an annual salary in excess of $100,000, you have to exclude the amount that's in excess of $100,000, not their entire pay. in its entirety, not the full amount of the pay in its entirety, but you have to exclude the amount in excess of $100,000. And if someone makes $100,000 and they were there for less than 1 year, you have to use the annualized amount of the salary. So for example, someone started midway through the year, okay? If you were to go to your end of the year payroll register, this person, let's just say they makes $150,000 and you went to your end of the year payroll register and you only see 75,000, you may say, oh, that's okay to include because it's not over 100,000. Now you have to treat that employee like they only made $100,000 and exclude the portion that would have been in excess of that. All right. I'm going to skip down a little. There are certain, if you receive certain credits for qualified sick and family leave wages, you'll have to exclude that when you're calculating. You have to exclude that portion of the employee benefits when you're calculating your payroll costs. For some of us that may be applicable, but I'm assuming for a lot of us on the call that may not be applicable. But the thing that I do want to spend a moment on is this last bullet under what is excluded. Independent contractors do not count as employees for purposes of calculating your PPP loan. And the reason for that is because they have the ability to apply for PPP loans on their own. So again, just highlighting, independent contractors do not count as employees for purposes of calculating the PPP loan. All right. So now that we kind of all understand, or hopefully we understand what the definition of payroll costs is, let's talk about what documentation may be required upon the application. All right. And this is very important. And again, I will point out that each lender may have a different requirement for the form or type of support that they are asking you for. But in general, they are all going to ask you to support the gross wages or the payroll, all of the payroll costs that you are presenting as part of your eligible costs and eligible loan amount. So what I would do is I would, to support the payroll, one, you should have your year-to-date 2019 payroll register available, or at least the total page. Some entities may ask you for the whole thing. Others may just ask you for maybe a summary page. They may also ask you for your quarterly 941 filings to support the amount of annual payroll that you have included in your application. So all of these documents, when you're getting prepared to fill out the application, you have to have them all ready to upload at the time in which you apply. All right. And again, one may ask you for a copy of a payroll or register. One may ask you for your 941 filings. Another may ask you for your Form W-3. Okay. In terms of supporting the other payroll costs, you should have at your disposal a summary of those retirement payments, whether they be the monthly contributions you make to your 401k plan or your other periodic contributions that you made to the retirement plan during 2019. Additionally, you should be prepared to provide a summary of the healthcare premiums that you're including as part of your payroll costs. That might be in the form of an Excel spreadsheet, which shows what you paid monthly and to which vendors. And then lastly, a summary of any state and local taxes you paid. And again, that may be a summary of the either the quarterly or the monthly payments that you remit on a state and local basis as it relates to any tax on compensation for employees. Now, this last item, some banks or lenders or entities that are participating in the PPP program may ask you for a copy of your financial statements, an income statement, and a balance sheet. Or if you're an independent contractor or sole proprietor, they may ask you for a copy of a personal financial statement. All right. At the end of the day, all of the amounts that you are reporting as it relates to your payroll costs that are included in the calculation of your loan should be supported. And so I will stop there. And as I stop, I will say, again, this was just meant to be a summary. All of the guidelines as it relates to the application process is on the SBA's on the SBA's website. They did issue some interim guidelines as it relates for the Paycheck Protection Program, which are on their website. Again, a copy of the application is on their website, and they also provide information regarding typical documentation that may be required of you. But if you don't remember anything else I say today, please remember this. When you go to apply, and most of the applications or most of the application processes are electronic, where you will go on to a lender's website, please have all of this information in hand so that you can timely complete the application process and upload everything right there versus having to sign in and out or come back at a later time and complete it. All right.
Thanks, Irene. Really appreciate that. I want to say to all of our viewers and attendees on this call that this PowerPoint will be made available to you. So if you didn't get a chance to get the information as we were talking about it, we'll make sure that you get a copy of the presentation, and you can go back and refer back to it. Information shared by Irene was really, really important that in terms of the application process, but it's more important that you understand that the SBA's website is where you really want to make sure you focus your attention. Irene's done a great job of giving you some foundation to help you be successful in the application, but it really is the information is on the SBA website. I want to move now to another part of the conversation. We're grateful and blessed to have Bill Bynum, CEO of Hope Credit Union, with us, and he's going to talk about what it means to select a financial institution as you're doing this. As many of you have heard, there's been some confusion around how the process works in terms of which financial institutions are willing to work with you on this thing, and I think we're happy to have Bill with us because he can talk a lot about what that process looks like and give you some real understanding of what's been going on and how to go forward into the future. Bill, the floor is yours. Thank you so much for being here.
Thank you, Marvin. Good morning. And I want to start by thanking the NAACP and Derek for his leadership in pushing this information out to our communities. As many of you know, if you can go to the first slide, the first round of the Paycheck Protection Program came and went fast. In less than 2 weeks, almost $350 billion that had been made available for small businesses was gone. And this was in a very confusing and chaotic environment. The rules changed on a regular basis up until the last minute, until the door was open. Several banks were not going to participate. There's still not a clear list of what financial institutions actually are participating. So if you're in the position of a small business or nonprofit trying to access these resources, there is still a great deal of uncertainty and confusion. So getting this information out is extremely important. So again, really appreciate what the NAACP is doing. I'm really glad that Irene and Mitchell Titus is on the line. They got into the details certainly much more than I am able to. Fortunately, I have colleagues at Hope who can walk you through this information, but it's really incumbent on us to remember what Derek said at the outset. This is a race now. Fortunately, there are new resources, but they will go even quicker than the first round now that people know that it's available, and there are more institutions that are lining up their customers to take advantage of it. This slide just gives some high-level statistics about the first round. Almost $1.7 million in loans were approved for over almost $350 billion. Of those, 74% by number were less than $150,000. which is suggested a lot of small businesses did get access to these resources, but it is also interesting that less than 20% by dollar amount went to those were loans less than $150,000. So the lion's share of the resources were much larger loans, and those are probably too much larger business. So, you know, after the dust settled, you saw familiar stories, the smallest businesses, businesses owned by people of color, businesses serving communities of colors, those that are more likely to employ people of color were on the outside looking in favor of those firms that had strong banking relationships. And so independent contractors, churches, nonprofits are struggling, but fortunately there's another round. And if you can go to the next slide, I'll dig into that. And that's why we're here today, to get as many of us ready as possible for this next round, so that people in communities that need it most can have access to these critical resources. And it's really important that while these are loans, if they are managed properly in the way that Ms. Davis described, these loans can be forgiven. This will be a grant. These resources, Congress did a great job in structuring it at one level, in that it is designed to help people stay employed. We just want to make sure that those who are most fragile have access to these resources. So looking at round two, you know, $310 billion were made available. Of that, $30 billion has been carved out, is set aside for depositories less than 10 billion. And Congress did include community, what they call community financial institutions, which are minority depositories, certified development companies, community development financial institutions are also in that amount. But it's interesting that that 30 billion of that 310 billion that is set aside for these smaller lenders, supposedly smaller, they include in that definition of small, those institutions with less than $10 billion, which is 9,800 plus of the 10,000 financial institutions in the country. So you still got small minority depositories and CDFIs, those local institutions that are closer to communities of color that are competing with much larger institutions. And so while there is a carve out, there is really it is a race to get as many completed applications through the pipeline once the door is open. And so if you can go to the next slide, I'll talk a little bit about that. So from a lender's perspective, you know, I've got a third of my colleagues at Hope teed up and ready to move these applications through as soon as we can. But again, I'm competing with institutions that are multiples time larger and more staff, and that have been doing SBA lending and thing than we do. And same thing with other minority depositories, minority banks and minority credit unions and community development and financial institutions. So we have to be ready. You have to be ready. I'll say that if you did apply in round one, but did not get funding, you need to contact your lender and find out the status of your application. Is it complete? If it's not complete, you need to make sure that it's complete and that it's teed up and ready for submission as soon as SBA opens up this program. As soon as Congress House passes it and is signed by the White House, the money is going to start to flow, and there's going to be a mad rush for these very precious resources. And so you need to be ready. We need to be ready. And so if you did apply, and I can speak from experience, my organization applied, we had all our documentation in, but for some reason we were not prioritized by our financial institution, one that we've been working with for many years. And so we called and we checked on the status. They assured us that it is all the documentation is in and is ready to be submitted to SBA for approval when the pipeline opens back up. hope that's true. But if you did not, if you weren't satisfied with if you aren't satisfied with the response that you get from your lender, apply to a different lender. I think you need to maximize your opportunity here. And so you need to go with an institution that you have a relationship or that you think will steward your application in a way that is important, as important to them as it is to you. You need to apply yesterday. You need to apply today. Again, this is going to open up the demand. I've heard estimates that there was as much as $1 trillion in the pipeline already for this 300 billion plus some $1 billion, and that amount is increasing every day. Again, lenders have pipelines. You want to make sure that yours is a priority. You want to make sure that your application is complete. Follow all of the direction that Mitchell Titus just gave. There's information on websites. Any lender that's doing PPP lending, it's likely going to have a checklist on their website. SBA has a list of the documentation on their website. We have Hope is a credit union. We're in 5 states, but we got additional authority from SBA to go from Virginia to Oklahoma. We're in Virginia, North Carolina, South Carolina, Georgia, Florida, Texas, Kentucky, Alabama, Louisiana, Mississippi, Arkansas, Oklahoma, and Tennessee, and I didn't say Texas. So it's on our website, www.hopecu.org. If we can be of help, we will do everything we can. And we're rushing to get as many as we can through. There are other financial institutions that are doing the same. I really do encourage you to find a financial institution that is going to take your application seriously. We're also working with nonprofits who are working with applicants to get your materials together. So find a Mitchell Titus, find an accountant, find a bookkeeper, find someone, a local nonprofit technical business assistance organization that can help you navigate this if you don't have the ability to do it on your own. But we need complete applications. We won't have the ability to go back and forth because we are trying to push as many communities, entrepreneurs of color, nonprofit service providers, folks that are on the ground, making sure that communities of color have the tools, have this access to this important tool through the pipeline as quickly as possible. So get your application ready, find a technical assistance provider, or if you go to the next slide again, there's, you can see Hope, there it is up there. You can see Hope Credit Union's website at the bottom. You've got those 2 other websites give you a list of Black credit unions and Black banks. I don't know if all of them are doing PPP lending, but I encourage you to start with the institution that is more likely to value your business, your community, and because unfortunately, historically, SBA lending has not gone to communities of color at the rates that they should. And so we need to do everything we can to tilt the scales in your favor as you look to take advantage of this important resource. I would encourage you to thank members of Congress for this program, but also encourage them to make sure that provisions are in place so that the financial institutions like minority depositories, minority credit unions, community development financial institutions have access to this so that they can get it to those communities that need it most. And Marvin, I'll stop there. Thank you.
Thanks, Bill. Appreciate that. Really, really important information. Thanks again. I want to acknowledge before we call on Kenneth Kelly to kind of bring us some information. from the Black banking perspective, that there's lots and lots of questions are being asked. We are tracking those questions not only in the chat box, but there's a Q&A box at the bottom of the Zoom screen as well. We are tracking those questions. The questions that we can get to quickly, we're going to try to respond to them as quickly as we can. But our role this morning is to try to get you the information you need to be able to get your application going. So let's keep it moving, because we want to make sure we're good stewards of our time. We're thankful to have Kenneth Kelly with us. Kenneth Kelly is the chairman and CEO of First Independence Bank. He also heads up the National Bankers Association. And so we're really excited to have him here. He's going to talk about this subject matter from the perspective of how Black banks are participating. As Bill has already acknowledged the fact, it's really important that we really consider how we engage Black banks in this process. And it starts with us to make sure that we are seeking out our Black banking institutions to be a part of it. So with that said, thank you, Mr. Kelly, for being here, and the floor is yours.
Great. Thank you, Marvin. Thanks for having us. And Derek, so wonderful to be with you. And thank you and the NAACP for everything you do on a daily basis on behalf of our people. So I want to say thank you, Derek, for that. You've heard a couple of my colleagues just speak a moment ago. Irene was so beautiful in laying out what you need to do. I would ask, if you get a chance, look at those slides. She laid it out perfectly. So I'm not going to spend any time really talking about that. My colleague now on this panel, Bill, just talked about some of the real issues. Sometimes you hear the headline, but you really don't see what's under the line. And one example of that is this carve out of $30 billion. It talks about minority depository institutions and CDFIs, community development financial institutions. But the reality is, if you saw his slide, we're competing against roughly 90% of the market still. So towards that 30 billion, we're still competing against 90. So it is not truly a minority set aside. So I want to say that. But most importantly, what I really want to spend some time talking about, and then I'll get into the banking piece, is that our advocacy is important at this point in time. You're seeing the confluence of economics, politics, and culture play out on our national stage. And why is that important, Kenneth? It's important because we were at the forefront advocating for nonprofits, advocating for churches. And that was back in March, making those appeals on the Hill at that point in time. And what happened is, when we got to the date of April 3rd, we found out that they were still left out. To the SBA administrators' credit, with the pushing from advocacy groups, they included churches, and that was on that Saturday when that actual administration ruling came out. But the point I'm trying to make is, as has been discussed by a couple of my colleagues, there is a need to be sure that the pie is wide enough that it covers all of the constituencies that we care about. We all know that African-American churches are the backbone of our Black communities in so many different ways, and so they need to be included. Well, they got a late start. As I just said, on Friday it opened up. They were not actually includable until Saturday. And so my point being, following the direction that Irene has laid out now and what Bill talked about, hopefully we can get more of those kind of in and at the table to participate. So let's talk a little bit about the African-American banks. Again, I will probably use the metaphor that we are trying to help put out a house fire with a garden hose. The reality is, we just do not have the total capacity to do it in a way that it should be done. And so we're working on some efforts to try to synthetically largen the pressure of that pipe so we can help serve some of the communities that we really care about. You can go to the nationalbankers.org website and look for a banker in your area. Bill stated so eloquently, if you do not have a banker, now is the time to date a banker. And I mean that more metaphorically, because what we saw in this process is that those who had relationships with their banks were more likely to be included. Doesn't mean that all were included. They were more likely to be included. And so the point I'm trying to make is, be sure to make the opportunity to get to know a banker, and to be sure that you have a personal relationship with someone at the bank that you bank. It has put a natural light on smaller community banks because they typically have high touch relationships. And so we were fortunate enough to help a few of our in our community, but definitely not to the capacity that we would like to have. So we need the support of this community. We need the support of the business people, which could help increase our capacity. And that could be through deposits, it could be through a checking account, et cetera. Look to be able to do business with, in particular, your minority banks and very specifically, African-American banks. Each of us know the story, and I really don't want to get into it in detail, but the dollar spends about 6 hours in our community. In the Asian community, that is about 20 plus days. And you can see that reflect in the capacity that those banks have. So if I had to make a final appeal, my appeal would be to you, we don't have to have all of your money, but we'd love to have some of it to give us capacity so that in emergencies like these, you have a relationship to relate to that could hopefully be helpful to you. So again, Derek, I want to thank you and Marvin for putting this on, inviting us to have a voice on behalf of African-American banks across this country. And we ask for your support and your advocacy to be sure that we can get these dollars into the communities that we care about. Thank you.
Thanks, Kenneth. Really appreciate that. Really, really, really important information. I tell you, we can't emphasize enough the importance of supporting our Black financial institutions. It's really, really, really critical. Those deposits are the lifeblood of those institutions. So we really need to make sure that we're doing what we should on our end to support our institutions. So we have, is Taya Moore, is she on the call? Are you on the call? I'm sorry. Taya is not a woman. Taya Moore, I'm sorry. I apologize for that. Taya, are you on the call? He's not. Okay. So we wanted to try to do and really try to make sure we're focused in on is the ability for you to understand the implications of doing business with the federal government. And so I want to make sure that we get a chance to answer some of those questions that have come up. We're going to spend some time now to kind of work through some of those questions. I'm going to sort of go back to some of our panelists with some questions that have been sort of directed toward us in terms of who's really able to apply for this funding. And so the question has come up a couple of times around sole proprietorships and sole owners. Irene, can you kind of go back to your presentation a little bit and begin to kind of dig a little deeper on actually what kind of operations, what kind of enterprises are eligible to apply for this funding?
Okay, there we go. All right, can you hear me?
Thank you. Yeah.
Great. Hey, so in terms of sole proprietors and independent contractors, and again, I don't want to give a non-answer, but all of these are legal determinations. But at the end of the day, if you're an independent contractor and your wages, let's just say, are 1099s and you pay self-employment tax, then you should be eligible. At the same as a sole proprietor. But again, when you go to apply, you will be prompted to answer a number of questions. I think that would, and then again, I'm not the lending institution either, but you would be prompted with a number of questions and information that you have to provide to support your position. And so I think through that process, as well as reading what's out on the SBA website, you'll be able to determine your eligibility. But I mean, again, you're a sole proprietor, you get a 1099, you get 1099 payments, or you're a sole proprietor, you pay self-employment tax, and you file an individual return, you should be eligible. But if you have any questions, you should either talk to the lender or talk to the lender if you don't have access to an attorney.
Thanks, Irene. Thanks so much. I think Taya has joined us. Taya, there you are. Great. Taya is our legal expert. and want to make sure that we are able to sort of address the legal concerns in applying for this funding. There are a lot of questions that have been arising around what does it mean to now be doing business with the federal government, how the money should be used, what are the sort of legal implications of all this. So thank you so much for joining us today. I'm going to open the floor up to you now. If you can begin to sort of talk about the legal implications and legal structures around this stuff, around the PPP program, that'd be great. Thank you.
Well, good morning. Thank you. Sure. So assuming that we're talking about the SBA 7A Payroll Protection Plan, I guess I'll, since I'm coming in sort of in the middle of the discussion, I'll just kind of give a quick overview of what's going on. As a matter of fact, one of my clients just called me up this morning and told me that they were a little bit concerned because they misunderstood how the program was being applied to them. So what they did was they averaged in their independent contractors and their employees, and they submitted the average monthly payroll for 1 month for 2019, timed that by 2.5 to get a formula that was exceeding what would be permitted under the program, because independent contractors are carved out from the employee of the company. And so I told them they need to go to their 941s, which normally are filed quarterly. And on line 2, you'll see the amount distributed to your employees. That is the number that you have to use to calculate the amount of loan that you qualify for. And because he made a mistake and submitted the form to his bank, it was in error. And I'm sure the bank will call him, or the application will be just discarded, and he'll either have to start again or won't be eligible for a loan going forward. Not to mention the fact that, you know, one could look at that as a misrepresentation, but it was inadvertent. So I'm not trying to scare folks in actually applying for these loans, but you do want to be careful, and you want to try to make the best of the situation by giving accurate and thorough information as you apply.
Ted, thanks for that. I just want to, I hate to interrupt you, but I want you to, there's a question about the process of converting the loan into a grant. Can you kind of talk a little bit about what that process is like, the sort of the things to be considered in converting the loan to a grant?
Sure. So the 7A loan can be used for payroll costs, rents, mortgage insurance, and utilities. And if the borrower meets the SBA criteria, it can be forgiven. So with respect to employees, the business must use 75% of the loan for payroll expenses and to maintain employee numbers that they had during an 8-week period. That 8-week period is between February 15th and June 30th. And so if they do that for the period at issue, the loan will be forgiven by 100%. If either of those levels drop, the forgivable amount is phased out. It's also important to remember that if you applied for and received an EIDL loan, that would be subtracted from the amount of money that you receive under the Payroll Protection Plan for forgiveness purposes, because they don't want you to double dip.
Great. Thank you. Thank you.
Absolutely.
All right, so listen, we've got just a few more minutes left, and I want to make sure that we are able to kind of get at some of the questions. There's also some survey questions that we need folks to answer while we're on the call, but I want to make sure that we get a chance to kind of address some of the broader questions that have come up. Lisa, are you on the call? Lisa Malone, are you on the call? Well, my colleague Lisa Malone has been compiling these questions that are popping up, and so I want to make sure that we try to get to some of them. Let me try to pull some of them up now. If you have already applied approximately 2 weeks ago with a bank and received an email confirming that your application was received, do you need to apply again if you haven't received a response from the lender? Any of the panelists?
No, you shouldn't. Well, first of all, you want to make sure if you have a good banking relationship that you rely on that banking relationship. And to the extent that you're in queue. Many of the banks have held those applications, and as soon as funding is made available, they will continue to process those applications. And so reapplying should not give you any added benefit to the extent that your application was accurate when first submitted.
Great, great. Next question. What is the guidance for small businesses, especially churches and nonprofits who pay their employees under Form 1099? Several entities are being left out simply because their employees don't receive a W-2.
Well, this is definitely true, and I'm sorry if I'm jumping in ahead of others more qualified, specifically the accountants, but they have made a dichotomy between businesses with employees and independent contractors. And I think I heard at least part of a discussion about that. Independent contractors are eligible for an amount of a loan, but it's equal to an 8-week portion of their 2019 net earnings, which is based on the IRS Form 1040 Schedule C.
Great. Taya, you really, you're filling in the gaps, man. Thank you so much. Let's see. Question, is the PPP applicable to businesses with no employees? Can you make that a simple statement?
Well, the answer should be no. If you're saying that the sole proprietor doesn't pay themselves a salary under W-2, then they'd have to apply as an independent contractor. That's the simple answer.
Okay. And one more question. I own my own business and I have no employees. I've applied for the PPP loan through my bank, Citibank, but they asked for tax form 941, which is a form one would fill out as an employer for employees. Since I have no employees, I was denied. I even provided my Schedule C and 1099s. By asking for this form, it seems like the PPP is only for companies that have employees. What am I missing? It's kind of the same answer to the last question. Could you say it again?
It is. So if you want to go in as an independent contractor, you're not going to be required to submit a 941. You're going to need to submit a 1040 Schedule C, which is what you file as a sole proprietor under your own individual taxes. You should also have a 1099 to the extent that you received one, a 1099 miscellaneous. Those are the forms you should focus on to submit to qualify and be eligible as an independent contractor under this program, not the 941, which of course you wouldn't use.
Great, thank you so much. Thank you so much. That's very, very, very helpful. So listen, we are closing in on the end of our hour together. I want to restate a couple of things. The PowerPoint will be made available to everyone. A recording of this webinar will also be available on our website. We're going to make sure that you have access to all of our panelists' information in terms of how to contact them, how to reach out to them with your specific questions. We are also compiling the questions that are being asked while we've been on this call this morning. We're going to make sure we create a document that gets at the answers to your questions in the FAQ. We'll also make that available to you as well on the website. And we also want to make sure that you understand that there are that this is really an important that you go quickly about this application process. This is not something we can delay on. As one of our panelists has already said, there's been over $1 trillion in ask for funding that is approaching $400 billion. And so we really do need to make sure we're encouraging each other to go ahead and get into this process and get into this process quickly. We do have a couple of minutes left. I want to give Derek the closing remarks, but before we do that, I want to say thank you to all of our panelists. Thank you, Irene Davis. Thank you, Congressman Dwight Evans' office. Thank you, Bill Bynum. Mr. Kenneth Kelly, thank you again for joining us. And Mr. Taya Moore, I really, really appreciate you joining us late, man, but you came in with all the answers to our questions. So thank you again for your willingness to participate. today in this webinar. This is not the last time we're going to do this, so I'm excited about the fact that we're going to be utilizing this platform again in the future to kind of get out the information quickly to our constituency and to the movement. With that said, thanks again. I want to give the last word to our President CEO, Derek Johnson.
All right, thank you, Marvin. I want to thank all the participants for joining us. We are here to try to provide the most accurate information timely. We are in a race right now. Once the bill passes and the president sign it and the links go up, financial institutions will be pushing applications through. But while at the same time, the NAACP is an advocacy organization, we also will be pushing our members of Congress, particularly members of the CBC, to do a carve out. Kenneth Kelly has been on the calls with members of the CBC. I've been on calls with members of the CBC, as well as Bill Bynum, to try to get the House of Representatives to do a carve out for African-American owned businesses, being very specific, or minority businesses, but at the very minimum, do a carve out for businesses with 10 employees or less. That's where over 90% of African-American business rests. If we have 10 employees or less, and we don't want anyone to use the language as if they are helping minority businesses, but in fact, with the nuance, you're putting us in the pool of 90% of the banking community who have not been friends to African-American communities in general, but specifically African-American businesses. If you think about what banks are doing at this moment, they are doing all they can to protect their investments with their large clients, overlooking the bread and butter of the African-American community. Over the last 10 years, the largest segment of new business creation have been African-American businesses. It is really important that we protect that growth. That was a shocking number to many, but it's a factual number. Over the last 100 years of our ability to really participate in this economy, our churches have been the staples of our community. And if we don't allow our churches to bridge over this moment, we're going to see an acceleration of gentrification in many of our communities, because those church buildings that we have invested in through our families for generations are in some of the prime real estates across the country. And as we have built the wherewithal to manage financial institutions, we must ensure that those financial institutions participate. This is a windfall for the banking community. They made billions of dollars off the first program because they understood early on how to navigate the system. We must make sure that our African-American financial institutions also participate so they can be stronger for our community, in our community, and our communities can grow and prosper. Finally, if you have a relationship with a member of Congress, particularly a member in the House, call them and request a carve out for minority financial institutions so we can be ensured that we participate. Secondly, advocate to ensure that businesses with 10 employees or less have a carve out. If we carve out 10 billion of the 400 billion on the table for those two things, we will generate the type of activity in our community to support our businesses like never before. This is not a giveaway. This is to ensure that our economy is robust, and a robust economy for African Americans is to ensure that our Black businesses, our Black nonprofits, and our Black religious institutions are cared for. And that can be done best by utilizing our Black financial institutions. Thank you all. There will be a survey. It is important that you complete the survey. We're trying to track this activity so we can show conclusively the success of these programs for our community. Have a great day. Please gather your information so you can get in a pipeline. We will share all of the expertise that you heard today. We will have a FAQ so that you can go back and refer to, and we will be in contact with you because we need your voices to advocate for a quality existence for African Americans across the board. Have a good morning.
Thank you.